Bitcoin just exploded. When we covered Bitcoin just 2 days ago, we were trading below 64K, and today Bitcoin absolutely ripped up, reaching 69,500 and knocking on the door of 70K. But after a big move like this, the question is, are we witnessing the beginning of the next Bitcoin bull run, or is BTC dangerously overextended and about to cool off? There are a few major levels on these charts that could determine exactly what happens next. And before we go over the top-down analysis, I just want to go over the winning trade that gave you guys. I've been calling a move towards 70K for a couple of weeks now. Actually, I was seeing a inverted head and shoulder here, left shoulder, head, right shoulder, measure move taking us basically to the 200 moving average. I have it here more or less around 71,500, 72K. We made it pretty much to 70K, but what's important is that we actually made it to the 200 moving average. So congratulations on whoever took this setup. This is a big win for the FlexCandle community. Now let's just start off here with the weekly chart really quickly. Right now the price of Bitcoin is at 68,226. It's come down a little bit since that 69,000K run, and right now on the weekly chart we're having a green engulfing candle. We're getting stopped here by the 21 moving average, which is at 69,064, and we have 4 days and 7 hours before this candle closes. So a lot could still happen. We could still retrace. This could become a wick, but right now this is looking pretty bullish. The RSI is pointing up. We're still below the 50. I would like to get above that, and the stochastics RSI still have a lot more room to continue to go up. I've been calling that maybe this could be some type of a double bottom, one bottom, two bottoms here. But in order for this to be confirmed, we would have to make it back here to these tweezer tops, pretty much the 50 moving average, which is at 81,633. That's a far stretch from where we are right now. The first thing that's important is for us to get back above this 21 moving average, because we could easily get rejected. Let's see how the rest of the week turns out. Now in the 3-day chart, the stochastics were toppy. We were on the way down, but look, now we're starting to get some curvature back up. We just broke through the 50 line on the RSI, and we got back above the 21 moving average. Now we have some resistance here at the 50 moving average at $68,907. This candle closes today. We close like this with a green engulfing candle. We're starting to get a little bit more bullish. We are above the 21 moving average. Obviously, I would want us to get back above the 50, the 80, the 100, and all these moving averages. But for right now, I'll take what we have. On the daily time frame, the stochastics are on the way up. We still have a lot more room. Now the RSI is starting to get overextended here. We're pretty toppy here. And now we just touched the 200 moving average. So this is going to be the make or break here. If we get rejected off of the 200 moving average and we cannot get above it, we're probably going to have a similar scenario like what happened here, where we came, touched the 200 moving average, we got rejected, we touched it again, and eventually we fell all the way back down. Usually the beginning of the bull market is when we break back above the 50 moving average on the weekly time frame, and that's currently at 81,000, and we also have to break above the 200 moving average on the daily time frame. So far we haven't been able to do it, and we haven't done it yet. Let's see how this candle closes. We're already starting to get a little wick. We are very overextended. We're far away from the 21 moving average at 64,118. So I would expect us not to really break above this 200 moving average just yet, and possibly just go sideways. And if anything, we'll probably retrace and touch this 100 moving average back at 66,285. Now, just because we get a retracement doesn't mean we're bearish. We made a major move up today, and we've been bullish for the past 3 days. So it's in Bitcoin's right to at least consolidate here before making a bigger move up. That's actually what I would like to see, because if we just blast up like this all the way up, we're going to get too stretched out from the 21 moving average. We're going to eventually have to come out. So I'd rather us just go sideways for right now and then see if we can finally blast through that 200 moving average. That 8-hour time frame, you can see that the stochastics are toppy. Now this could roll over since we are very overextended from the 21 moving average, or this could also hump back up and we might get one more move up to 70K, 72K before coming down. That's not out of the question. Now the thing is, this candle is starting to get red, and this candle closes in about 6 hours and 40 minutes. If this candle closes red, we're probably going to have tweezer tops and probably start making a move down. Now that doesn't mean we have to fall all the way down to this 21 moving average. The 21 moving average is going to come up as the price comes down, and maybe we can meet it somewhere in the middle at around 66K or so. 4-hour time frame is giving me the same vibes. This candle closes in 2 hours and 40 minutes, closes like this. It could be tweezer tops. Stochastics though are on the way up. Let's see if they continue to go up or if we roll over. But look, the RSI is super overextended. We're here in this black area. Usually this means we're probably going to roll over. Look over here, we didn't even make it to the top of this black area here, and we ended up rolling over. Here we're super far away. Now on the 1-hour time frame, stochastics here are toppy, the RSI is toppy. We already closed a red candle. That's tweezer tops to me, and we're starting to get a another red candle here again, far away from the 21 moving average. That's at 65,118. So I'm going to predict that maybe we're going to do something like this, where we do some type of a falling wedge. Now, two scenarios could happen. We could either do a falling wedge, or we could go sideways and create a flag. I'm gonna go with the falling wedge idea, and maybe the 21 moving average catches up to price, like I'm saying, around 66,000, 66,500. But if this ends up breaking out from here, let's start expecting a move towards 71,500 pretty much. So let's see what ends up playing out. We don't know how these candles are going to play out here. If this goes sideways, the move will probably be even higher. Let's see what ends up happening. We're already starting to come down. We're about to hit 68K right now. If we head over to the 15-minute time frame, we see that the stochastics are starting to reset. The RSI is coming down. You see that the 21 moving average right now is at 66,641, and we already have 4 red candles in a row. It looks like we might be coming down to meet this somewhere here. So right now, I'm bullish on Bitcoin. As long as we could hold above 65K, I think we're going to be ranging between 65K and 70K. If we start losing that 65K area, then, you know, things get a little dicey. I would want to hold 64K, but it looks like if we consolidate and we could hold above 65K, we could start making a run above 70K. And the make or break for me, again, guys, is going to be this 200 moving average. If we could pierce through this 200 moving average and start closing candles above it, this could be the beginning of the bull run here. If we get rejected again, then we probably will end up having more downside. Remember, I do have this in a bear flag. You see the pole here coming sideways, and I have the measure move taking us to 47,000. So if we cannot get back above the 200 moving average, that bear flag could still be in play. All right, guys, so that's the breakdown. If this gave you clarity or a setup to watch, do me a favor, like, drop a comment, subscribe. And if you have a stock or crypto you want me to go over, drop it in the comment section. This is FlexCandle, where we read the candles and flex the move. Catch you on the next chart.